Hello, everybody. If this is your first time here, welcome. If not, welcome back. This one is about overtrading. Overtrading is an account killer. Chances are, if you're overtrading, you are not seeing the market correctly. You are seeing the market correctly and you're being greedy. Or maybe at some point you seen the market correctly, you lost those profits, and now you are trying to trade to get them back. All of those three scenarios ultimately lead to a lost account, and that is due to overtrading. If you are not seeing the market correctly, it's okay. You don't have to force it. You have to shut the computer down. Shutting the computer down is just the best way, because at some point in time, if you keep doing the same thing over and over and over, at some point in time, you'll get to the point where eventually you'll realize like that I'm not seeing the market correctly, and you will be able to shut your computer off, or just not, or sit in front of the computer for that day and just not take a trade. But it takes time to get there, right? If you get punched in the face so many times, you'll get tired of it and you'll do something about it. Trading is the same way. So if you're not seeing the market correctly, you have to find ways to stop trading. And even though I'm telling you this because I've been through it before, and other traders are probably out there saying the same thing, some people watching this are still going to have to get punched in their face. You know what I mean? That's just the way it is. It depends on the person. Some people have to keep going on until they get tired of it. And some people are able to learn from others' mistakes and watch videos and listen to what other successful traders are saying. Not that I'm a successful trader just yet, like so many years of success, but I've been through a lot to get to this point to where I'm at now. And I'm here to tell you that if you are overtrading, the only way to fix that is to find some way to stop. And there's some people that will watch this, and I guess you can say they will be a little more strong-willed, a little more disciplined about themselves, and they will shorten that part of the learning curve by saying, you know what, I'm not trading right, I'm not seeing this well, I'm gonna just shut it off. It's not gonna work. If it didn't work for anybody else, why would it work for me? I'm recognizing that I'm in that part in my trading journey. I'm gonna just shut it off. And so some people will shorten the learning curve that way. So if you're at that point in your trading journey where you're just over trading, giving profits back, whatever it may be, then it may help you to start to focus on shutting the machine off. And there's some people that are over trading because they are being greedy. You have to understand that every time you're in the market, you're exposing yourself to risk. If you are trading to make money, then what is the sense of exposing yourself to more risk after already taking gains? I don't care if it's $100 or $200. And I will admit myself, earlier on, when I seen that I can make $1,000 in a day, $500 in a day, or slightly more than $1,000 in a day, I wasn't happy with taking $100 and $200 for the day, because ultimately what it boils down to is it's kind of you being greedy, right? You're trying to rush the process. I didn't want to take $100 or $200 because I knew I can make more, but I couldn't make more consistently. I would make the money and then I would give it back. So that let me know that I had a problem. I got to a point where I said, you know what, $100. I'm just good with $100. It stopped being about the money again. And I went back to my previous mentality that I had when I first started trading, where it was just about learning to trade, right? So I made this just about being consistent. Once I was able to do that, I went maybe like 3 or 4 days making $100, not caring what the market did. It really changed my trading. It really changed the way that I behaved in the market, because I said, oh, this isn't bad. I can make my money and go, right? I want to be a full-time trader. I am not trading to sit in front of the computer for 8 hours a day. I want to free my time. And so if I can make money and get out the market and free my time up a little more, then that's what I'm going to do, right? That's what I'm in trading for. I'm not in trading to work more than I did at a job, or as much as I did at my regular job. I want the time and freedom to do more, but that's just me. And so $100 a day quickly became $200. And it was so easy. I did 200 maybe 3 or 4 days. So this is into the next week. And before I know it, that 2 had turned into 4 and 5, because I was taking the same trades, but instead of trading one contract, I was trading two contracts. Then I started to realize how you can capitalize on the same small trades that you take just by upping the size. And if you don't overtrade, if you don't expose yourself to the market more than you should, where probabilities click in, right? Because the more you trade, the more probable it is that you will lose. If you don't overtrade and you don't allow probabilities to kick in, you just take your profits and get out the market. That's when you start to become a successful trader, because it's really easy to spot money and make money in the market. What you'll find is risk management is the hardest part. You can make money, but can you keep it? And so overtrading comes back in, because if I've made money in the market, why am I going to expose myself to risk, to more risk, and overtrade, and then end up losing that? What will happen is, if I'm being greedy and probability starts to kick in and I'm not disciplined enough to say, you know what, I'm up, I'm doing great, I've taken 5 trades, I'm 5 for 5. The next trade I take, if I lose, I'm out. Most of the time when you're a beginner, that doesn't happen. You have to go through that part of the learning curve to where you say, okay, I'm 5 for 5, I'm going to take the next trade. The next trade you take, you lose money. So what happens? You don't stop trading. You say, now you want to get that money back. So then you take another trade and you lose money chasing that. So now you want to get that money back. And you keep digging yourself into a hole. Before you know it, if you're trading with prop firms, you have hit the daily loss limit or blown the account. And that is because probabilities start to click in and you started to overtrade because you were getting greedy, right? You didn't take your gains when you have it. You wanted more when you couldn't get more and it took some away. You weren't disciplined enough to stop. And so what happens is you lose the account. So not seeing the market well, walk away. You got money in the market, walk away, or learn to read the market if you want, if you're still a beginner, because I did it too. I'm not going to say that there was nothing that could get me away from the charts in the beginning. Now I'm to the point where if I make my money before 11, which I usually do, make my money before 11, I'm away from the charts. I don't want to expose myself to more risk to end up in the third scenario situation where I was up at some point in the day and then I lost my money, because that will send me on tilt, or that will have me chasing the market, and now I'm trading the P&L instead of focusing on the trades. Anytime you trade the P&L, you're not focusing on the trades, you will lose, because you're just trading to make money. Looking at the chart, you can find a trade. If you look at the chart all day, a trade's going to appear. It doesn't matter. You're looking for a trade, you're going to find one. But is that the trade that you were supposed to take? That becomes the question. So when you're trading P&L, your mind is thinking, yes, everything is a trade. I just need to get this money back. And you start over trading even more. Probabilities kick in, and then you lose your account or hit the daily loss limit. As a trader, if you want to be successful, you have to find ways how not to do that. And that is one of the hardest things to do. And like I said, some people are going to hear this. They're going to hear other traders say it, and they still have to get punched in the face themselves, because they have to go through that learning experience, through those emotions, before they can understand why not to do it. No different than, telling a child not to touch a hot stove. And I get it. But what I'm making this video for is for those people who are in that situation and who are trying to quit. I'm telling you, the only way to do it is to stop. Once you stop, that first day you stop, it's no different than when you start taking $100 and $200, knowing you can make more, just turning the system off, turning the computer off, and walking away from it, and not looking at it until after market close, starting to gain that confidence and that muscle memory of what it feels like to be consistent and to shut the computer off after you made your money. It's no different than that. The first time you stop, you will feel so good about yourself. And the more you do it, the easier it will become. Now, some people may go through what I did, to where I thought once I stopped and I was able to not look at the market, I got to a point where I stopped trading, but I kept the market open. And what started happening was sometimes I would find myself back in a trade when I didn't want to trade and I was losing money. So I had to go through that part of the learning curve and just saying, you know what, every time I shut it off, I'm a little more disciplined. And so I would just shut it off and make my money, shut it off after I made my money and go away from it. And then eventually I got to the point where I can make my money, shut it off, and just watch the rest of the market for the purpose of proving to myself or showing that I didn't miss anything. Some days the market does move in the afternoon and you can catch a little trade. But most of the time, I was just looking at it. You know, I just look at it and I'm like, oh yeah, you could make some money here. But it got to the point where it's like, why? I don't want to risk what I made. And so then you start understanding, this is what it feels like to manage risk. This is what it feels like to not expose myself to more risk. This is what it feels like to not put myself in the market. I don't care what the market is doing. I made my money. I'm not going to overtrade, and I'm not going to risk what I made overtrading, and I'm not going to lose it because I exposed it to risk. So with that being said, do not overtrade. Do not give back gains. If you're seeing the market wrong, just turn the computer off and try it again the next day. The market is not going anywhere. If you need a break, take a break for a day. Yesterday, I didn't trade because we had a bunch of, as you can see here, if you can see that, I did not trade that. Yesterday, Monday, September 23rd. I didn't trade that. We had a bunch of sideways action. Before, a year or two ago, I was going to try to trade it. I didn't care. I was going to find the trade. I was going to mark zones, change to the 1 minute chart. It's not worth it because I would always lose money. Even if I made money, I would lose because I was trading too much and probabilities clicked in. So I hope you gained some value in this video. Thank you guys for watching. Feel free to post any questions, comments, or concerns you may have in the comment section, and I will see you in the next one.